Hello, investors. Welcome to Alpha ETF, the coolest YouTube channel for all things ETF. I'm your host, and today I'm going to review the Invesco Solar Energy UCITS ETF Act. This is an ETF that invests in companies that are involved in the solar energy sector, which is one of the hottest topics in the world right now. But is this ETF worth your money? Let's find out. Solar energy is the future, right? We all want to save the planet and reduce our carbon footprint. But how can we do that without sacrificing our returns? Well, one way is to invest in the Invesco Solar Energy UCITS ETF Act. This is an ETF that tracks the MAC Global Solar Energy Index, which includes companies that produce solar panels, inverters, batteries, and other equipment for the solar industry. Sounds awesome, right? But before you rush to buy this ETF, let me tell you some pros and cons of this fund. And don't worry, I won't bore you with numbers. I'll just give you a score from 0 to 10 for each criterion, based on my own opinion and research. And at the end, I'll give you a total score for this ETF. Ready? Let's go. Total expense ratio, TER. The first thing you need to know about any ETF is how much it costs to own. The total expense ratio, TER, is a measure of how much the fund manager charges you for running the fund. The lower the TER, the better for you. The Invesco Solar Energy UCITS ETF Act has a TER of 0.69% per year. That means for every 100 euros you invest in this ETF, you pay 0.69 euros in fees every year. That's not too bad, but it's not too good either. It's actually higher than the average TER for ETFs in Europe, which is around 0.5%. And it's much higher than some other ETFs that have TERs below 0.2%. So for this criterion, I give this ETF a score of 6 out of 10. Fund volume. The next thing you need to know about any ETF is how big it is. The fund volume is a measure of how much money is invested in the fund. The bigger the fund volume, the better for you. Why? Because a bigger fund means more liquidity, more diversification, and lower trading costs. The Invesco Solar Energy UCITS ETF Act has a fund volume of around $100 million. That's not too bad, but it's not too good either. It's actually smaller than some other solar energy ETFs that have fund volumes above $500 million. And it's much smaller than some other ETFs that have fund volumes above $10 billion. So for this criterion, I give this ETF a score of 6 out of 10. The next thing you need to know about any ETF is how risky it is. The volatility is a measure of how much the price of the fund fluctuates over time. The higher the volatility, the riskier the fund. The Invesco Solar Energy UCITS ETF Act has a volatility of around 40% per year. That means the price of this ETF can go up or down by 40% in any given year. That's very high. It's actually higher than the average volatility for ETFs in Europe, which is around 15%. And it's much higher than some other ETFs that have volatilities below 10%. So, if you invest in this ETF, be prepared for some wild swings in your portfolio value. You might make a lot of money, but you might also lose a lot of money. So, for this criterion, I give this ETF a score of 4 out of 10. Sector/country/theme exposure. The next thing you need to know about any ETF is what it invests in. The sector/country/theme exposure is a measure of how diversified or concentrated the fund is across different industries, regions, or topics. The more diversified the fund, the better for you. Why? Because a more diversified fund means less exposure to specific risks or shocks that might affect one sector, country, or theme more than others. The Invesco Solar Energy UCITS ETF Act has a sector/country/theme exposure that is very concentrated on solar energy companies from around the world. That means this fund has a lot of exposure to specific risks or shocks that might affect the solar industry more than others. For example, the solar industry might be affected by changes in government policies, subsidies, tariffs, regulations, or environmental standards. It might also be affected by changes in technology, innovation, competition, or consumer demand. It might also be affected by natural disasters, weather patterns, or climate change. So, if you invest in this ETF, you are betting on the solar industry to do well in the future. But you are also taking a lot of risk that something might go wrong. So, for this criterion, I give this ETF a score of 5 out of 10. The last thing you need to know about any ETF is how well it performs. The performance is a measure of how much the fund returns over time. The higher the performance, the better for you. The Invesco Solar Energy UCITS ETF Act has a performance that is hard to describe in words. It's been a roller coaster ride for this fund. It's had some amazing highs and some terrible lows. It's been one of the best performing ETFs in some years and one of the worst performing ETFs in other years. It's been very unpredictable and inconsistent. So, if you invest in this ETF, you might make a lot of money, but you might also lose a lot of money. And you never know what to expect. So, for this criterion, I give this ETF a score of 5 out of 10. Calculation of the total score. Now that we have scored this ETF on 5 criteria, let's calculate the total score. The total score is the sum of the individual scores divided by 5. So, for this ETF, the total score is 6 plus 6 plus 4 plus 5 plus 5. 5 equals 5.2 out of 10. That's not too bad, but it's not too good either. So, based on this score, I would say this ETF is not worth your money. Well, that's it for today's review of the Invesco Solar Energy UCITS ETF Act. I hope you enjoyed this video and learned something new. If you did, please give it a thumbs up and subscribe to Alpha ETF for more cool videos like this one. And don't forget to leave a comment below and tell me what you think about this ETF or any other ETF you want me to review next time. Thanks for watching and see you soon.